So now let us see this next question. So here XYZ commenced a business on 1st October 2024. Their PSR is profit sharing ratio is 4:3:3. X guarantees Z that Z share of profit will not be less than 80,000 in the year. Okay. Profit for the firm ended 31st March 2025 is 1,27,500. Now understand this thing. See, the entire financial year begins from 1st April 24 to 31st March 25. Okay. Now, when has the business commenced? Business has commenced on 1st October 24. Okay. Now, X has guaranteed Z that Z share of profit will not be less than 80,000 in the year. So, 80,000 profit in the year. Okay, business has commenced in 1st October 24. So, October, November, December, Jan, Feb, March. So, Z's share of profit for 6 months should be how much? 80,000 into 6 by 12. So, that comes to 40,000. So, the guarantee given by X to Z is for the entire year. But when the business starts in the middle of the year, or there is a new partner which is admitted in the middle of the year and he is given the guarantee, then we have to take only proportionate period for calculating guarantee of that particular profit. Did you understand this? So you can just write it here. Write this timeline and write this. If the business starts in between the year, okay, or new partner who is given guarantee is admitted in between the year, then calculate proportionate profit. Okay, so calculate this is very important. Okay, this is very important. So if the business has started, see, business was not there for the entire year and the guarantee given is 80,000 for the entire year, but business was not there for the entire year. So we have to calculate it proportionately, that is for 6 months, and this guarantee is given by whom? X guarantees Z. So this guarantee is given by X to Z. Did you understand this? Now, profit for the profit of the firm for the year ended is 1,27,500. So let us see how much is the profit for the 1,27,500 is the profit, and their profit sharing ratio is 4:3:3. So let us calculate. So this is a firm. Okay, 4:3:3 is the profit sharing ratio, and 1,27,500 was the profit. And who are the partners? 3 partners, right? X, Y and Z. So 1,27,500. So 1,27,500 into 4 by 10 will be the share of X. Y will be 1,27,500 into 3 by 10. Z will be 1,27,500 into 3 by 10. Calculate this and then calculate the deficiency of Z. So how much is the deficiency? Guaranteed profit is 40,000 minus actual profit. So calculate the deficiency. So how much do you get here? 38,250, 38,250, and this is how much? 12,700. 51,000. Correct? Now what is the deficiency of Z? 40,000 minus 38,250. Correct? So that comes to 1,750. Now this has to be 1750 has to be given by X to Z. So now let us prepare profit and loss appropriation account. We will first do it with the method 1 and then we will do it with method 2. So method 1 is prepare profit and loss appropriation account and adjust in that. Okay, so how much was the profit? By P&L account, net profit, you have 1,27,500 and then this profit needs to be distributed. So to profit distributed to partners capital. So you have X, Y and Z. So initial profit I'll write it in inner column. How much was that? 51,000, 38,250, 38,250. So 51,000, 38,250 and 38,250. Okay. Now X has to give Z 1750. So less Z's deficiency 1750. And here in Z we will add deficiency 1750. Okay, and then Y there is nothing, so same profit will come outside 38,250. For Z it will be 40,000. Correct? And X 51,000 minus 1750. So 49,250. So if you just take a total of it, it will be same 1,27,500. Okay. Now we will do it with method 2 also, adjusting entry. Okay, so method 2 is adjusting entry. So what is the adjusting entry here? X is giving to Z 1750. So in adjusting entry, what do we assume? We are a firm, we are a mediator. We take this from X and give it to Z. So as a firm, if I have to take something from the partner, my firm's liability towards the partner decreases. And if I have to give something to the partner, my firm's liability towards partner increases. So the journal entry here will be X capital account debit 1750 to Z's capital account 1750. Now see, here we are just solving the examples. That is the reason we are not writing a narration and everything to the journal entry. But in case if they ask you this as a question, you always have to write everything, okay? And even this P&L appropriation account and everything has to be proper. Partners capital account, only if they ask you, you have to prepare. Otherwise you don't have to prepare. But since this is an example, we will prepare it just to have a thorough understanding of the concept. So let us prepare a partners capital account and understand the net effect. Okay, so we have X, Y, Z, X, Y, Z. Okay, so in second method, method 2, what we are assuming that your profit is already distributed. So by P&L appropriation account, original profit whatever was there, it distributed. That was 51,000, 38,250 and 38,250. Okay, Then second thing, we have to just post this entry. So X capital account debit. So to Z's capital account 1750 and Z's capital account is credited. So by X capital account 1750. So now if you see the net effect of this is 51,000 minus 1750, you will get 49 to 50. Y is same, there is no change in Y. Z 38 to 50 plus 1750, so that gives you 40,000. So net effect is same in both the methods. See here, this is a question, example 19 is a question wherein you have all the three guarantees. Okay, all the three guarantees, that is partner to firm, partner to partner, firm to partner, everything is there. So if all three guarantees are there, what is the sequence that we should follow? So always remember, when all three guarantees are there, the sequence that we should follow is, first we must fulfill this guarantee, partner to firm, always. Second, firm to partner, and third will be partner to partner. Okay, so when three types of guarantees are there, then this is a sequence. Okay, priority, this is a priority in which you should do it, sequence in which you should do it. First you do partner to firm, then firm to partner, and then partner to partner. We have already covered this when we have written those points. Okay, that guarantee points, whatever we have written, no, in that we have already covered all this. Okay, just let us just go there and revise it once. So see here, so three types, partner to firm, firm to partner, and partner to partner. So we have solved those examples. So 14, 15 and 16 were those, 14, 15, 16, correct. Then there was one example of loss also we solved. Okay, then guarantee of profit is generally calculated according to time. This was the last example which we solved, wherein the partner was, the business was started in the middle of the year. If it is in the middle of the year, then the guarantee of the profit should also be calculated proportionately. And now we are solving a question wherein the question is for this fourth point. In case of multiple guarantees in the single question, we must follow the order mentioned in point 2, that is partner to firm, same order is mentioned over here, partner to firm, firm to partner, partner to partner. Remember, you need to remember this, okay, by heart this. Example 19. So see here, A, B, C, D are the partners. So A, B, C, D are partners and their profit sharing ratio is 4:3:2:1. Okay. A guarantees B for a minimum profit of 3,12,000. So A has guaranteed to B. So what type of guarantee is this? Partner to partner. Correct? C is given a guarantee of 2,80,000 by firm. So what type of guarantee is this? Firm to partner. Okay. Now D gives guarantee to the firm to earn a profit of 2,50,000. So D is giving a guarantee that he will bring so much business that he will bring in so much business that the profit that he will bring is 2,50,000. Now see this carefully. Net profit of the firm for the year ended 31st March 2025 is 9 lakhs. Okay, and D earned only 1,50,000. So when this is specifically given, see, total profit of the firm is obviously greater than 2,50,000. But what guarantee had given was given by D is he will bring in profit of 2,50,000, but he has got the profit of only 1,50,000. So there is a deficiency. Okay, so there is a deficiency which we need to recover it from D. So what type of guarantee is this? Partner to firm. So now what is the sequence over here? Partner to firm is first, then firm to partner is second, and partner to partner is 3. Okay, now prepare P&L appropriation account and pass the adjustment entries, all 3 types of guarantee. So we are going to do both method 1 and method 2 also in this. Okay, so now let us do it sequentially. Okay, so now what is happening over here? The first type of guarantee, what is the so don't get confused when you have multiple guarantees. Don't get confused, go one by one in the same sequence. So first guarantee is partner to firm. So in this case it is D to firm, correct? Now D has given a guarantee of 2,50,000, whereas D was able to earn only 1,50,000. So what is the deficiency? Deficiency is 2,50,000 minus 1,50,000. So you have 1 lakh. 1 lakh is the deficiency which will be given by D, partner D, to firm. Okay, so this is the first guarantee. Now second we will do firm to partner. C is given a guarantee of 2,80,000 by firm. Now see here, now so profit of the firm, for second one we will do profit of firm. So what is the profit of the firm given over here? Profit of the firm given is 9 lakhs. Okay, 9 lakhs was the profit, plus whatever deficiency is from partner to firm, this will be given by D to firm, correct? Okay, so partner D to firm. Okay, so deficiency which will be recovered from D, we have to add it because it will be added in our total profit, correct? We always do that, na? So total profit after adjusting this deficiency of partner to firm is 10 lakhs. Did you understand this or is this confusing? See, whenever multiple guarantees are there in one question, always remember the sequence. Okay, what is the sequence? First we will fulfill whatever is the guarantee from partner to firm, then firm to partner and partner to partner. That much is clear. Now see here, now what is happening is, see, first we saw what is a partner to firm guarantee. Okay, so D said that I will bring in so much business that from my side your profit will be 2,50,000. He has told the firm. But when they analyzed this 9 lakh profit, they came to know that D was able to bring only so much business that earned the profit of 1,50,000. Okay, so from D's side there is a deficiency of 1 lakh, correct? So in partner to firm deficiency, what we do? We take it from the partner. So D will be giving 1 lakh to the firm. That much is clear. First type of deficiency, whatever we learned. Now see, the net profit of the firm is 9 lakh rupees. Okay, so 9 lakh is the net profit of the firm, and plus we will be receiving a deficiency of 1 lakh from D. Correct? So that should also be included in the profit. So now total profit of the firm is 10 lakh rupees, which will be distributed to all the partners. Now listen to this thing. So see, most of you will get a confusion over here. See, D gives a guarantee to the firm to earn the profit of 2,50,000, and here it is specifically mentioned that D earned only 1,50,000. So sometimes D will give, see, partner to firm guarantee will be either in such a way that he will bring in so much business that it will earn so much of profit, or the other type of guarantee will be partner will say no, the total profit of the firm will be 10 lakh rupees. Okay, then in that case we have to compare it with the total net profit of the firm. Okay, we will come across that question when we solve some more examples. But here what partner is saying is, D is saying is कि I will, from my business, whatever business I am bringing it to firm, will earn a minimum profit of 2,50,000, but he was able to bring in so much business only which could earn a profit of 1,50,000 out of 9 lakh. Okay, so this 1,50,000 is a part of 9 lakhs. You understood that, no? No confusion over here. Once they have earned this 9 lakh rupees as profit, they analyzed, okay, ki how much profit is earned by each partner. I mean, how much business is brought in by each partner. Okay, now it's not always necessary that every partner will bring the customer. See, in partnership firm also, it's a business. So every partner will take care of different things. One will take care of your marketing, selling. One will take care of handling day-to-day operations. One may take care of all the skills, okay, that are specialized skills or technical aspects of the business. Okay, so again it depends on business to business. So whatever is given in the question, we have to follow that. Okay, practically this is the case. So usually when you have multiple partners, not all partners will go into sales and marketing. One or two will go in sales and marketing, one or two will go into research, one or two will go into technical and all that. It's always like that. Okay. So now this is clear. So total profit after adjusting these deficiency is 10 lakhs. Now this 10 lakhs needs to be distributed among all the partners. In what ratio? The ratio is 4:3:2:1. This ratio. Correct. So let us distribute this 10 lakhs into this ratio. So 10 lakh, we have 4 partners, right? A, B, C, D, and the ratio is 4:3:2:1. Correct. So A will get 4 lakhs, B will get 3 lakhs, C will get 2 lakhs, and D will get 1 lakh rupee. Now see here what is happening. Now we will go to second deficiency. Is what? Second deficiency is firm to partner. Correct. So firm to partner. Second is firm to partner. Let me just highlight this. Second is firm to partner. So partner who is given a guarantee over here. Let us see this. C is given a guarantee of 80,000, 2,80,000 by the firm. C is given a guarantee of 2,80,000 by firm. So C is given a guarantee of 2,80,000, whereas C's actual profit is 2 lakhs. So how much is the C's deficiency? Guarantee minus actual profit. So 80,000 is the C's deficiency. Now this C's deficiency is given by the firm. So it will be borne by A, B and D. And what will be the ratio? They didn't give any ratio, right? This will be borne equally or what? They have not given us anything. So we will use what is the profit sharing ratio of A, B and D. So A is 4, B is 3 and D is 1. So 4:3:1. Okay, so how much will A bear? 80,000 into 4 by 8. 4 by 8 is 4, 5, 6, 7, 8. Remember, here we will not take denominator as 10 because we have excluded C. Okay, so we will just take whatever is the profit sharing ratio among remaining partners. This is important. PSR. This is PSR among remaining partners. So don't make a mistake of taking denominator as 10 over here. Okay, I hope you are understanding this. This will be 80,000 into 3 by 8 and this will be 80,000 into 1 by 8. Correct? So it will be 40,000, 30,000 and 10,000. Is this clear?
Yes, ma'am, it's clear.
Now see, we have one more guarantee in this question, no? So let us calculate profit after adjusting C's deficiency. Okay. So what is A's profit initially? We will just write down how much was the initial profit of A, B, C, D. A's profit is how much? A's profit is 4 lakhs, correct? And then B's profit is 3 lakh, C's profit is 2 lakhs, and D's profit is 1 lakh.
Yes, ma'am.
Now we will adjust this deficiency. So what are we going to do? We will add 80,000 over here to C, and it will be given by A, it will be given by B, and it will be given by D. So this comes to 3,60,000, this comes to 2,70,000, this comes to 2,80,000, which is correct. He was guaranteed that profit, so it is correct. And the last one comes to 90,000. Now see here, now we have done this. Now let us go to the third type of guarantee over here. Third type of guarantee is A guarantees B for the minimum profit of 3,12,000. So this is a guarantee given by A to B, correct? So partner to partner. So third type, partner to partner. So A has given a guarantee to B, correct? And what should be the profit? How much should be the profit? 3,12,000. But how much is the B's profit over here? We just calculated it. 2,70,000. Correct? So B's deficiency will be 3,12,000 is the guaranteed profit. Correct? Minus 2,70,000. So that comes to 42,000. Now this 42,000 will be given by A to B. A will give this 42,000 to B. This is partner to partner. Now did you understand this clearly? Or there is a doubt?
I understood, yeah.
Understood. Now we will do it with two methods. Okay. So we will just do method 1 and we will pass the adjustment entry also. So actually what has happened here, there is some space restriction, I think. Next page you may not have place. So what I suggest is you prepare a P&L appropriation on the 1.54, you adjust it, and then in next page you can pass the journal entries. Or if you have a space, your handwriting is small, then that's fine. Okay, so method 1, we will first do profit and loss appropriation account. So here by P&L account, so you have a net profit of 9 lakh rupees. Okay, now first deficiency was partner to firm, correct? Partner to firm was how much? 1 lakh rupee. Now this 1 lakh rupee needs to be recovered from D and it has to be brought in the firm. So your journal entry will be D's capital account debit to P&L appropriation. So it will be by D's capital account 1 lakh. Okay. Now let us distribute the profit to the partners. So to profit transferred to partners capital. A, leave some 2-3 lines. Okay, whenever you have multiple type of deficiencies, leave just 2-3 lines. Now see here, what was the initial profit? Initial profit after this 10 lakh was distributed in the ratio of 4 lakh, 3 lakh, 2 lakh, 1 lakh. Let me write that down. 4 lakh, 3 lakh, 2 lakh and 1 lakh. Okay. we have finished with the first deficiency over here. This first deficiency is partner to firm. Okay. Now we will do the second type of deficiency, that is firm to partner. So firm to partner, whom are we giving? We are giving it to C plus 80,000 and then we are deducting it from A, B and D. Let us adjust this. Deficiency, this is 40,000, correct? Then from B we will take 30,000. So put it in the bracket. Then C, we have to add it 80,000 and from D $10,000. Okay. Now, so this is what you can just mark it over here for your reference. This is firm to partner. All firm to partner. Okay. Then last is now partner to partner. In partner to partner, who is paying whom? A is paying B. So let's take out from A and give it to B. So less B's deficiency 42,000, okay, and add it to B. Now let's take everything to the outer column. So 4 lakh minus 40,000 plus, this is plus, sorry, no, sorry, A is giving, no, this will be minus 1. So 4 lakh minus 82,000, correct? So that will be 3,18,000. Then this will be 3 lakh minus 30,000, so 2,70,000 plus 42,000. So this will be 3,12,000. Then here C, it will be 2,80,000 and D will be 90,000. So if you total this, you will get 10 lakhs. So this type of questions may come in the exam wherein you have a multiple guarantees. Okay, in that you need to calculate multiple deficiencies and then solve it. Is this clear? Now what we will do is, we will pass the journal entries as per method 2. So method 2, whatever are the journal entries that are required, all that we will pass. So first journal entry is for partner to firm. In partner to firm, who is giving? See the working, who is giving? D is giving to the firm. So the entry will be D's capital account to profit and loss appropriation account. That will be the first entry. D's capital account debit 1 lakh to profit and loss appropriation account 1 lakh. Okay, then second entry will be for distribution of profit. I am not doing that entry, this will be already done. Distribution of 10 lakhs distribution of 10 lakhs to partners in PSR. Okay, that will be the second entry. So what will be that entry? P&L appropriation account debit to A, to B, to C, to D. That will be the second entry. Correct. So once that is distributed, so let me just write only. So P&L appropriation account debit 10 lakhs to A's capital. It was 4:3:2:1, right? So 4 lakh, 3 lakh, 2 lakh and 1 lakh. 4 lakh, 3 lakhs, 2 lakh and 1 lakh. That will be the second entry. Then the entry will be firm to partner. Okay, let us see the working, what is happening in firm to partner. See here. So what is happening? You are taking money from A, B and D and giving it to C. So firm is taking from A, B and D. So A's capital account debit, B's capital account debit, D's capital account debit to C's capital account. Okay. So see here, either method 1 or method 2, not both of them. Okay, they will ask you. So A's capital account debit, you are taking 40,000 from A. B's capital account debit 30,000. D's capital account debit 10,000. To C's capital account 80,000. This is the third entry. Okay. Then fourth is partner to partner. Let us see the working for partner to partner now. So partner to partner is what? See, A has to give it to B. So firm will take it from A and give it to B. So A's capital account debit to B's capital account. Okay. So now see here, Mohan, Sohan and Suresh were partners in the firm sharing profits in the ratio of 2:2:1. Okay. Suresh was guaranteed a profit of 70,000. Okay, Suresh is guaranteed a profit of 70,000. So this is, partner is guaranteed a profit by firm, correct? Because if nothing is given, we will assume that firm has guaranteed it. So this is firm to partner. Any deficiency on account of the guarantee to Suresh was to be both by Mohan and Sohan in the ratio of 3:2. So remember, they have a agreed ratio to bear this deficiency. So it won't be in their profit sharing ratio. The profit for the firm for the year 31st March 2022 amounted to 2 lakhs. Prepare profit and loss appropriation account of the firm. So see, most of the questions they will ask you profit and loss appropriation only nowadays. Okay, but sometimes, rarely, in some cases, or if there is a loss, you cannot adjust it in profit and loss appropriation. Then in that case, you have to pass that adjustment entry. That is method 2 of accounting. Now here they are asking you to prepare profit and loss appropriation account only. So we will prepare a profit and loss appropriation and workings will be after that. Okay, remember the presentation that we do it in examples along with your notes. That is only for you to understand. That is the reason we are doing it step by step. But for presentation, you have to follow whatever we do it in this practice questions. Okay, so whatever they are asking you will come first and then working notes will be followed after that. Okay, so in the books of firm, draw profit and loss appropriation account for around 10 to 12 lines. So now whenever they are giving, for the particular year ended, you can also write here for year ended 31st March 2022. This is also a part of your presentation. Okay, draw the format. So let us start. So see here, profit for the firm, okay, for the year ended amounted to 2 lakhs. So this is a profit. So it has been transferred from your profit and loss account. So by profit and loss account, this is P&L appropriation account, correct? So that comes to 2 lakhs. Now we have to see how much is the deficiency, if there is a deficiency. So for that we will prepare one working note. So working note number 1, whose deficiency? Deficiency of Suresh. Okay, so of Suresh. Okay, now how much is a guaranteed profit? 70,000. Okay, so firm's profit is 2 lakh. Out of that, Suresh, how much will Suresh get? 2:2:1, right? So 1/5 will be the share of Suresh. Correct?
Yes, ma'am.
1/5 into 2 lakhs. So that comes to 40,000. This is the actual profit. So now how much is the deficiency? Deficiency is guaranteed profit minus actual profit. So guaranteed was 70 minus 40. So 30,000 is the deficiency over here. Correct? 30,000 is the deficiency. Now this 30,000 they have given. It will be borne by whom? Mohan and Sohan in the ratio of 3:2. So this 30,000 will be borne by Mohan and Sohan in the ratio of 3:2. Okay. So Mohan, Sohan. Okay. Mohan to bear, Sohan to bear. 3:2. So 30,000 into 3/5 and 30,000 into 2/5. So this comes to 18,000 and this comes to 12,000. Okay. So now let us write all this in your profit and loss appropriation account. So let us write to profit transferred. You can write transferred to partners capital. If they are giving fixed capital method, then always remember partners current account. It will be partners current account. So what are the names? Mohan. Okay. Then you have Sohan. Leave some space, okay? And Suresh. So total profit is how much? 2 lakhs. The total should be 2 lakhs over here. Correct? So now Mohan, how much will Mohan get? 2/5 of 2 lakhs. So first we will calculate that. 2/5 of 2 lakhs. Then Sohan will also get 2/5 of 2 lakhs. And Suresh 1/5 of 2 lakhs. Correct? So this comes to 80,000. This also comes to 80,000 and Suresh was 40,000. Then we calculated deficiency, correct? So let us pass the entry for that. I mean adjust it directly. No need to pass the entry, adjust it. So how much is the deficiency? 30,000. So we will add this 30,000 to Suresh. $30,000 and it will be given by Mohan and Sohan. Mohan will give 18, Sohan will give 12. So less deficiency of Suresh. Mohan will give 18 and Sohan will give 12. Always whenever you are reducing, put it in the bracket. So now let us calculate how much is the net. So here if you see Suresh, total comes to 70,000, which is correct. This was the profit that was guaranteed to Sohan. So here it will be 80 minus 12. So you get 68,000 and here 62,000. So if you add this, you will get 2 lakhs. Okay. Let us read it first. So A, B, C were partners in the firm. On 1st April 2018, the balances in their capital account stood at 8 lakhs, 6 lakhs, 4 lakhs respectively. Okay, these are the balances in their capital account. As per the provisions of partnership deed, partners were entitled to interest on capital at 5%, salary to be 3,000 per month and commission of 12,000 to C. Okay. So all this needs to be given, interest on capital, salary, commission, everything. So everything will come, if you are preparing P&L appropriation, everything will come in P&L appropriation. Now, A share of profit, now listen to this little carefully. A share of profit excluding interest on capital was guaranteed as 25,000. That is without considering interest on capital, A was guaranteed a profit of 25,000. Okay, this is what it means. B share of profit including interest on capital. So B share of profit plus interest on capital but excluding salary. So B share of profit plus interest on capital should be 55,000 per annum. Any deficiency arising on that account was to be met by C. So this is what? This is partner to partner. So C has given guarantee to both. C has given guarantee to A also. C has given a guarantee to B also. Okay, partner to partner guarantee. So what guarantee? C has given to A that after giving your interest on capital, your profit share should be 25,000. Whereas for B, C has given a guarantee that your interest on capital plus profit should be 55,000. Now let us see. The profit for the firm for year ending are given as 2,16,000. Prepare profit and loss appropriation account for year ending 31st March 2019. So let us prepare a profit and loss appropriation account. So here you have lot of things, right? You have interest on capital, salary, commission. So your profit and loss account has to be little big. So make it 3/4 page or something. Okay. So in the books of firm, profit and loss appropriation account for year ended 31st March 19, credit and debit. Shall we start? So now see here. So profit of the firm amounted to 2,16,000. That will come over here by profit and loss account. We have transferred it, right? 2,16,000. Okay. Now what else is there? As per the provision, partners were entitled to interest on capital at 5% per annum. So let us give them interest on capital. So interest on capital is like an expense. So interest on capital is transferred to debit side of profit and loss appropriation. We have seen transfer entries and closing entries, right? So to interest on capital account, and how much is that? We have A, B and C, right? So for A, 8 lakh into 5%, for B 6 lakhs into 5%, and C is 4 lakh into 5%. Correct? $30,000, $20,000. Total comes to 90,000. Now, next is salary to be 3000 per month. So to salary to partner, and you can write B. How much is that? 3000 per month. So 3000 into 12. So 36,000. Only one partner. So in the outer column. To partner's salary or to salary to partner. Any account name is fine. Then commission of 12,000 to C. So to partners commission C. How much is that? 12,000. Okay. Now let us calculate deficiency if there is deficiency of A and B. Let us prepare a working note for that. So working note number 1, deficiency of A and B, and if there is some deficiency, C will be giving it. Let us see that. So now see here, A share of profit excluding interest on capital was guaranteed at 25%. Okay, so now what we will do is, in this case, excluding, so for excluding, what we need to do, we need to calculate whatever is their share of profit over here first. Okay, so before doing this working note, what we will do is, we will close this and we will calculate what is the basic initial profit share for each partner over here. Okay, so 2 profit transferred to partners capital. So you have A, B and C, right? So A, leave some 2-3 lines to adjust the deficiency, B and C. Okay, so now how much is the profit? You calculate the total profit. 2,16,000 minus 12,000 minus 36,000 minus 90,000. Calculate fast. How much is the profit? Yes, 78,000. Now this 78,000 will be distributed to 3 partners, A, B and C. Now see what is their ratio. Is their ratio given anywhere? Just see. If the ratio is not given, what we have to assume? Their ratios are equal. So 78,000 divided by 3. We have to distribute the profit equally, 1:1:1. So that comes to 26,000 to A, 26,000 to B and 26,000 to C. Did you understand this? If ratio is not given in the question, if profit sharing ratio is not given in the question, it is equal. Okay. Now, deficiency of A and B. So now see here, A share of profit excluding interest on capital. So we have calculated how much is the A share of profit excluding interest on capital. Correct? So A share excluding interest on capital. How much is that? 26,000. How much is guaranteed? How much is guaranteed? Guaranteed at 25,000 per annum. So can you see here? Actual profit. This actual profit is greater than the guaranteed profit. Actual profit is 26,000. It is greater than the guaranteed profit. So there is no deficiency. Guaranteed profit was only 25,000. So here no deficiency. Any doubts here? Now let us calculate it for B. So A is, there is no deficiency. So 26,000 will be only the final amount. Now let us calculate for B. B share of profit including interest on capital but excluding salary was guaranteed at 55,000. So what we need to do? We need to add share of profit and interest on capital. So let us add it for B. So B share of profit plus interest on capital. So how much is the B share of profit? Share of profit of B is 26,000. Interest on capital is 30,000. Correct? So 26,000 plus 30,000. So you get 56,000. Again, if you see this 56,000 is greater than the guaranteed amount of 55,000 per annum. So there is no deficiency. Okay. So sometimes you need to read the word of the guarantee. Okay. Guarantee can be including interest on capital. Guarantee can be including salary. Guarantee can be including partner's commission also. So if that is the case, you have to add that also to the profit. Okay. So for that, you have to see the question, read the question properly. Now in this case, there is no deficiency for both of them. So whatever we have done, it's correct. No need of any adjustment. So this P&L appropriation is correct. Okay, done. So question number 43. Okay, let us read it. Meeta, Rita and Sandra are partners, were the partners in the firm, sharing profits and losses in the ratio of 2:2:1. Okay, Meeta had personally guaranteed that in any year Sandra's share of profit, after allowing interest on capital to all partners at 5% per annum and charging interest on drawing at 4% per annum, would not be less than 10,000. So what Meeta had guaranteed personally means partner to partner. So Meeta had guaranteed, personally guaranteed means she did not guarantee it on behalf of firm. She had personally guaranteed. So this is partner to partner, Meeta to Sandra. So what did she guarantee? That once you get the profit, you allow interest on capital at 5% per annum, charge interest on drawing at 4%, and after that whatever profit you calculate, that Meeta's profit would not be less than 10,000. Okay, we will see. The capitals of the partners on 1st April 2015 were Meeta 80,000, Rita 50,000, Sandra 30,000. Okay, these are the capital balance. Why is the capital balance given? To calculate interest on capital. The net profit for the year ended 31st March 2016 before allowing or charging any interest. That is before adjusting, before deducting interest on capital, before adding interest on drawings, is 40,000. Meeta had withdrawn 4,000 on 1st April 2015 while Sandra withdrew 5,000 during the year. Now understand the difference over here. Meeta had withdrawn 4,000 on 1st April 2015. So for Meeta, okay, interest on drawings will be calculated from 1st April to 31st March. Whereas Sandra's drawings throughout the year is given. So in this case, if it is throughout the year, we have to assume that drawings are evenly, amount is evenly withdrawn throughout the year. So we have to multiply it by 6/12. You remember, right? I hope you remember that. So now let us prepare a profit and loss appropriation account for around, again here also you prepare it for 3/4 page. Okay, so now see profit. How much is the net profit? 40,000. So let us write that by profit and loss account, 40,000. Now we have to, what all we have to do? Interest on capital and interest on drawings. Okay, so let us first calculate interest on capital. So interest on capital, we have to debit it to profit and loss appropriation account. So to interest on capital. So we have two partners, right? Meeta and, we have three partners. So Meeta, Rita and Sandra. So Meeta, how much is for Meeta? See, 80,000 into 5%. Correct? So 80,000 into 5%. Then Rita is 50,000 into 5%. Sandra is 30,000 into 5%. So we are charging interest on capital on this opening balances. Correct? So this comes to 4,000, 2,500, 1,500. So total is 8,000. Correct? Now let us calculate interest on drawings. So by interest on drawings is like an income, so it will come on credit side. I hope you remember the closing entries by now. Okay, so Meeta, let us calculate it for Meeta. So Meeta will be 4,000 into, she had withdrawn it on the first day of the year, so 4,000 into 4% directly. And second is who? Sandra. Sandra is throughout the year she has withdrawn 5,000. So 5,000 into 4% into 6 by 12. Correct? Calculate it. 160. And Sandra is 100, right? So it comes to 260. Okay, so now is there anything else? No. So now let us close. This comes to 40,260, 40,260 minus 8,000. So 32,260 is the profit. 32,260 is the profit. So now to profit transferred to partners capital. So you have three partners, right? Meeta, Rita and Sandra. So Meeta, then leave 2-3 lines. Rita, leave 2-3 lines, and Sandra. Okay, so what is their profit sharing ratio? Profit sharing ratio is 2:1. Correct? So Meeta's share will be 32,260 into 2 by 5. Rita will be 32,260 into 2 by 5. And Sandra will be 32,260 into 1 by 5. Calculate it. So how much you are getting for Meeta, Rita, Sandra? Yes. Yeah. This is 6452. Then Rita and Meeta will be just double of it. Correct, na? Because it's 2:1. So Rita is 12,904. Meeta is also 12,904. Did you get this? Now see here. See what they are saying. That what was the guarantee? That after allowing interest on capital, that is after excluding interest on capital. Now see the wordings. Wordings are different in this question. So what they are saying, after allowing interest on capital and after charging interest on drawing, whatever profit you are getting, in that her share, whose share? Sandra's share should not be less than 10,000. Now if you see the Sandra's share over here, it is 6452. It is less than 10,000. So we will calculate her deficiency. Okay, so actual profit share is 6452, correct? So deficiency is guaranteed profit, that is 10,000 minus 6452, that is a deficiency. So how much is the deficiency? 3548, and this 3548 will be given by whom? It will be given by Meeta, because it is partner to partner. So reduce it from Meeta and add it to Sandra. So less Sandra's deficiency. How much is it? 3548. Okay, and how much is Rita? Rita will be same, and here Sandra, add deficiency 3548. So now here this, how much is this one? 12,904 minus 3548. So how much do you get? Here you get 9356. Then this remains same, 12,984, and this comes to 10,000. So for presentation, what you can do is this, see this 30 to 260, you need not write it over here. Okay, there is other way of presentation. So don't write this 30 to 260 over here. Instead of that, what you can do is you can just take this final figures in the outer column. Okay, so so this will be 9356, right? Meeta is 9356. This is 12,904, and this is 10,000. Because we are adjusting deficiency, then we do not have place, right? So you can just do it in this way. Instead of writing the total profit in the outer column, total profit you just write it over here and then calculate the profit share of each partner. Then what you can do is adjust the deficiency and you can write whatever is the profit share of each partner. This is one more way of presentation. This looks more clean because you don't have space inside. You don't have two columns over here to write it in somewhere over here. So this looks more neat. Now let us go to the next question over here. So this is a chartered accountants firm. Okay. So 3 chartered accountants, Mohit, Ronit and Shobit, form a partnership. Profits being divisible in the ratio of 3:2:1. Okay. Subject to following. Shobit's share of profit guaranteed to be not less than 15,000. So this Shobit share of profit, now who has guaranteed this profit? Nobody, right? This is not partner to partner, so it will be firm to partner guarantee. Okay. Ronit gives guarantee to the effect that the gross fee earned by him for the firm shall be equal to his average gross fee of preceding 5 years when he was carrying profession alone, which works out to at 25,000. Okay, so see, now Ronit is giving the guarantee to the firm over here. So this is a guarantee given by partner to firm. So what guarantee Ronit is giving is that his gross fee that he will bring in. So in short, whatever clients he will bring in will be equal to 25,000. Okay. So profit for the year of the partnership is rupees 75,000. Gross fee earned by Ronit to the firm is 16,000. So he is able to bring only 16,000. So there is a deficiency over here. So he had promised that he will bring in the gross fee of 25,000, that is income of 25,000, but he was able to earn only 16,000. So this is a deficiency and which needs to be recovered from Ronit. Okay, so you are required to show profit and loss appropriation account after giving effect to above. So let us prepare a profit and loss appropriation account. So this, see now, whenever you have multiple guarantees in the single question, remember the sequence. The first is partner to firm, second is firm to partner, third is partner to partner, Now here we do not have any partner to partner. We have only two, partner to firm and firm to partner. So first priority will be this and second will be this. Okay, no doubt still here. Shall we solve? In the books of firm, profit and loss appropriation account for year ended. Is year ended given here? No, nothing is given. Okay, so if year ended is not given, if you are written it, just put a dot dot dot, or don't write it, just write profit and loss appropriation. But if you are written it, just put dot dot dot. Okay, so now profit for first year of partnership is rupees 75,000. So by profit and loss account 75,000. Okay, now so there are two guarantees in the question. So what we will do is, first we will solve this partner to firm. So how much had Ronit promised? 25,000. How much he was able to bring? 16,000. So there is a deficiency. So this partner to firm deficiency, we have to recover it from Ronit, correct? So we will recover it from Ronit. And what will be the journal entry? Ronit's capital account debit to profit and loss appropriation account. So by Ronit's capital account, okay, and how much is the deficiency? 25,000 minus 16,000, correct? So that comes to 9,000. Now let us close and calculate the total profit, and then we will see this Shobit's guarantee. Okay, so 75 plus 9 is 84. 84,000 distributed to three partners in their profit sharing ratio. So 2 profit. There is no interest on capital, no interest on drawings, so we don't have to do anything over here. Transferred to partners capital. So what are the three partners over here? Mohit, Ronit, Shobit. So Mohit, leave 2-3 lines. Ronit, Shobit. Okay, now see what is the ratio? 3:2:1. So 84,000 in the ratio of 3:2:1. So 84,000 into 3 by 6. 84,000 into 2 by 6 and 84,000 into 1 by 6. Calculate it. So see here, 84,000 I am not writing over here. Instead of that, after reducing deficiency, whatever is the net amount, net share of profit for each partner, I will write it in the outer column so that the presentation looks good. Okay. Okay. So how much does that come to? Yes. So 84,000 into this is how much? 14,000. This is 28,000. Correct? Yes, and this is 42,000. Okay. Now see here. So let us go to this one now. Shobit's share of profit guaranteed is 15,000. Now actual share is 14,000. So there is a deficiency. Let us calculate that. So working note number 1. Shobit's deficiency. Okay. So actual profit is 14,000 and guaranteed profit is 15,000. So how much is the deficiency? Deficiency is 15,000, guaranteed profit minus 14,000. So you get 1,000. Now this 1,000, okay, 1,000 deficiency, how will they bear? There is no agreed ratio which is given, right? So who has to bear this? There are three partners, Mohit, Ronit and Shobit. So it's Shobit's deficiency. So who are remaining partners? Mohit and Ronit. So since agreed ratio is not given, they will share this in their profit sharing ratio, that is 3:2 between Mohit and Ronit, among Mohit and Ronit, I'm sorry. So among Mohit and Ronit, their profit sharing ratio is 3:2. So this deficiency will be borne by them in that ratio. So it's Mohit and Ronit. So Mohit, okay, and Ronit. So borne by Mohit and Ronit in the ratio of 3:2. So 1,000 into 3/5, correct? This 5 is 3 plus 2 and 1,000 into 2/5. So this comes to 400. So we have to reduce 600 from Mohit, 400 from Ronit and add 1,000 to Shobit. Let us do that. Let's Shobit deficiency 600, Shobit's deficiency 400, and here add deficiency 1,000, 600 plus 400. Now let us take this to the outer column. So this comes to 15,000, this is 28,000 minus 400, so 27,600, 42,000 minus 600, so you get 41,400. If you add it, you should get 84,000. Is this clear? Any doubts here? Okay, so this completes our guarantee. Okay, guarantee of profit. So I told you, right, this chapter is broadly divided into three parts. So the first part is your interest on drawing, interest on capital, partner's salary, partner's commission, how to calculate that, then how to account for that, then what is a fixed and fluctuating capital method, what is a charge against profit and appropriation of the profit. Okay, all that is first part. Okay, you have small topics in that first part. Then second part is this partner's guarantee. Now the third part will be your past adjustments or prior period adjustments. So that is like a broad topic. It's again a one chapter in chapter itself. Okay, so that has the past. So from tomorrow we will do that past adjustments, or also known as prior period adjustment. Both mean same, correct? Prior period is nothing but past. So either it is called as past adjustments or prior period adjustment. Both mean same. So tomorrow we will be doing those past adjustments and prior period adjustments. Okay. So that's it. So any doubts till now?